Hi, welcome back. I want to talk about a really important form and type of analysis that so many retail traders just don't do. And it's actually an extremely important part of your process when you're looking for a trade, when you're in a trade. And this is more about position trading. So I'm not talking here about intraday trading order method, for example. I'm talking about position trading, trades where you're going to hold them for a few days or maybe longer than that. It's very common for people when they have a view to then go and look for information that essentially confirms their view. We see it all the time, and this is called confirmation bias, and it's known to lead to bad decisions. So people, if they like a stock, for example, they kind of ask other people's opinions who also like that stock. They tend to overweight information that confirms their view. And this is very dangerous for us. And if I give an example, a couple of weeks, I mentioned in my video about Michael, the lessons from Michael Burry and how retail traders learned the wrong lessons. I mentioned some of them I was talking to, and he was a retail trader. He'd been short the Nasdaq for about a year, losing money. And it's someone I just bumped into in a more sort of friendly sort of setting, right? And here we are having a chat, and I was sort of pointing some views. And what I found interesting about him was he probably doesn't get to meet professional traders or hedge fund traders very often. And here he was talking to someone in the industry, and he didn't take the opportunity to ask, well, what do you think? What do you think I should do with this trade? What do you think about my short Nasdaq trade? He wasn't interested. He was only interested in information that confirmed his view. Wasn't interested in finding information that maybe suggested he had the wrong trade. I had a number of suggestions, in my head I would have given him, but he wasn't interested. That's very common for people. So what you need to do, what's really important in your processes when you're looking for a trade, is to actively seek out information that might disconfirm your view. Actively seek out information that could be contrary to what you're thinking. Now, how you do this, it's unlikely that the information is going to come from within the contract you're trading. So this is where knowledge of correlations becomes important, and just a broader looking at the market to see, is there any information out there that might suggest my trade is wrong? Now, we do this before we have a trade, but also when you're in the trade. Constantly look around, has anything changed? Is there any information that I might be wrong? It's important, it's vital to get out of the confirmation bias loop that so many traders are in. By doing this, we can help to reduce big losses in particular, reduce the times where we get hit by unforeseen losses because we're not looking for them. So seeking this confirmation is so important as a trader, looking and asking, why might I be wrong? And just as an anecdote about how this can be misinterpreted, a number of years ago now, I joined a new desk, a bond trading desk in a large investment bank, a number of star traders, star salesmen, and people at this bank. And when I got there, and when I put on larger positions on my trading book, I would usually just go around the department and just try to essentially ask people, why am I wrong here? What could I be doing wrong with this trade? This is what I think. This is what I've done. Why could I be wrong? And my colleagues misinterpreted. I was new to the desk, and they just thought, who is this guy who just doubts himself? He's got no sort of confidence in his trades. He's always doubting what he's doing. And they saw that as a sign of weakness, which I found interesting. Now, over time, they got to sort of understand this sort of quirk in my trading. They still kind of didn't quite get it. But as I progressed and they saw my P&L, they realized that I wasn't a bad trader. They just sort of struggled to understand how an experienced trader could sort of doubt himself. And I wasn't doubting myself. I was just trying to find out why I might be wrong, trying to seek this confirming evidence. Now, there's a difference between that and just playing devil's advocate. I'm not saying, just give me anything back for the sake of it. I'm saying, is there any real evidence that my trade might be wrong? And it's such a vital and important part of your process when you're doing your analysis, even for quant style traders. If we all know that backtesting has a lot of weaknesses, right? And we know that what we do when we backtest is not necessarily going to happen when we go live. So even when you've got backtested results, you've got a ton of data behind you, you still need to try and work out why could this be wrong? And for me as a trader, when I'm designing trades, constructing those sorts of trades, what I really try to find out is what's driving the P&L of this trade, particularly with option trades where the P&L could be driven by a number of factors. It could be related to volatility. It could be related to more about delta. It could be related to a whole bunch of different things. What I want to find out is what's actually driving the P&L of this trade. And therefore, if I know that, I can then think about, well, what factors could hurt that? and are any around at the moment or potentially going to be around. So look for disconfirmation. Make sure in your process, in your checklist, or however you go about your position trading, that you have in there part of your process to actively seek out disconfirming evidence why your trade might not be a good one. If you can't find that evidence, then take the trade, and you keep the trade, and you keep looking for that evidence. And eventually you may find something, and that may cause you to exit the trade. If you can't find any disconfirming evidence, then great, you keep the trade going. So hopefully this will help you if you're a position trader. Thanks again for watching.